Hi, so we are talking retirement, and I'm not sure if you're doing anything towards, planning for your retirement financial kitty or not, but let's have a quick discussion on what you can do. And, retirement sounds extremely boring and sounds like the least exciting thing that you want to do right now, but it is also important. And believe me, if you do it the right way, it does not take away any excitement from your life. Now, you could be intraday market trader, you could be a Bitcoin trader, and you might be thinking that you'll grow your wealth with these assets. And you may or you may not, because these are volatile assets and they're really not meant to help you secure your future in a sense. You can do this with a portion of your money, your savings, but with a portion of your savings, you should also try to build a steady retirement kitty. In the worst case, it's just savings that you're putting aside, and if there is an emergency, you can actually use those savings. Now, retirement, let me not use the word retirement because it does sound quite boring. Okay, planning for the years when you're no longer going to be working or actively bringing in income is easier than you think. What you need to do is put aside small sums of money. Earlier the better. If you start, say, in your late 20s, even putting aside 10,000, 15,000 rupees a month into a regular kind of investment option will be okay. If you start in your, for the next 20, 30 years ahead, right? That's when you're thinking that, okay, I won't be getting regular income and let me just relax in life by the time you are, 50, 55. If you start in your late 40s, then that amount needs to go up as much as 1.5 lakhs or 2 lakhs, depending on what your final figure is, that you need to start investing regularly every month. So the earlier you start, the better it is, firstly. Secondly, what are your options really? So for retirement, for your, planning for the years when you are not going to be bringing in income, or you're going to be financially free or financially, not independent, but financially free, and you don't, you can determine what you want to do with your time. For those years, it's important to firstly be a regular saver and investor. Secondly, it's important to choose an asset which can actually beat long-term inflation. Typically, these are growth assets like equity and real estate. Real estate, the issue is that it's a very bulky investment. You need to take loans and etc. With investing in equity, you have the option of going with very small amounts, picking the vehicle you want, whether it's a mutual fund like a managed fund or whether it is directly in equity, but you can invest small amounts and you can invest regularly through systematic investment plans, even in direct equity. So it's easier. Then there are other tools like the Public Provident Fund. Yes, that's, that is a long-term 15-year investment. However, the return you get on that at 7.1% is not great, even though it is tax-free. Then there is the National Pension Scheme, which includes equity investments in it, not up to 100%, but up to 75%. That's a good tool. It's a very low cost tool and it has a lock-in. So once you invest, you can only withdraw, you can in an emergency, but you can otherwise access it only when you are at the age of 58 or 60, right? So that is a really long-term investment. However, there are other issues with it, like an annuity. The government has incentivized NPS in this year's budget as well by allowing you a larger deduction of 14% of your salary for the contribution that your employer is making. In the new tax regime, you can do this deduction. In the old tax regime, you still have the leeway of doing 1,50,000 plus 50,000 more of deduction to save taxes. So NPS also you can look at because it helps you save taxes and invest for the long term and have a little bit of equity allocation so that you have that inflation beating return. Okay, so the 2-3 things that we are talking about. Start early, have assets which are growth assets, so they compound your return over a period of time, and equity is one of those which is easy to invest in. You can start with small sums. Be regular in your investment. Unless you do that, you will not make a habit out of it. When your income starts increasing, if you've started early, you've worked smart, you've started early, and you have you're investing 10,000, 15,000 a month, towards your retirement, then make sure that you keep propping it up as your income goes up by the same proportion, right? So then you are really on your way to becoming financially free quite early in life. And lastly, you have to figure out a way that you don't dip into this pool that you are building for a time when, all other income, active income stops. Now it's harder to do because there is always a temptation that, because you can withdraw these funds at any time, not NPS, not PPF, but definitely if you're investing in equity, you can withdraw. So the best way to do it is perhaps keep it in an account and not check it very often, or entrust the investment to an advisor who can handhold you through the discipline required to remain invested. So some of these things, having an accountability partner who can again handhold you through the discipline, some of these things do work well. Lastly, where do you invest? So within the equity mutual fund arena, there is a lot. And again, if you're already into market trading, you may think you don't need to, but again, trading is very volatile. It's not meant to build your safety cushion for your financial future. So you can just go for a basic index fund, which will help you get that equity exposure. It's like you're investing in the Sensex or the Nifty, and you're just kind of riding the growth trend over the next 20, 30 years. And if the Indian economy keeps growing over that period of time, your investment should also keep growing steadily over that period of time. Important to be regular, important to start early, important to be disciplined not to withdraw that money, and important to not take unnecessary risks when it comes to the corpus that you are collecting for years, when you do not wish to have an active income that puts demands on your time, and you wish to be fully in control of your time. So there you have it. Call it retirement, call it financial freedom, call it what you may, but this is the best way that you can plan, and the earlier you start, the better it is.